From a technical perspective, this is the most important step of all from a technical perspective. I would say that step one is one of the key reasons the vast majority of traders lose money. They do not limit their losses consistently to a specific dollar amount. All right. Step four is the most important technical loss component of our trading strategy. I don't want my traders to lose more than one bar on the chart, no matter what they're trading. I do not want them to lose more than one bar. This is my 1 bar rule, and I'm going to share it with you all today. We're going to go back to Oxy here. My traders are told, now what you're looking at is 2 moving averages on Occidental Petroleum here. This moving average, the blue one is called the 20 period simple moving average, and the red one is the 200 period simple moving average. All these moving averages do is sort of smooth out the data. The blue moving average is smoothing out the stock's data over 20 individual bars. It's giving you the average of the past 20 bars. The red one is giving you the average of the past 200 bars. All right. Now, my traders know that we don't trade without these 2 moving averages on the chart, and I'm going to speak about them a little more thoroughly later. My traders also know that they should be looking for power surges off of these 2 moving averages. Power surges. So take a look at the first bar of yesterday. This is yesterday's price data, May 14th. Look at the surge off the area of the 200 period moving average. All right. So this is one of the things they're taught to look for. Surges off the 200, surges off the 20. We've got 2 moving averages, and surges off of them are very interesting plays. All right. They're also taught the color changes off of the moving averages. So we've got surges. This is a surge, a power bar off the area of the 200. A color change, let me show you what this is. This is a color change. Let's say you have a green bar and you have a red bar followed again by a green bar. This is the point that green turned that this bar turned the market back to green from red. It temporarily switched to red, but green took the market back by eliminating the high of the red bar. At the moment green takes out the high of the red bar, my traders are taught to strike, buy. Say they buy 100 shares. All right. So they're taught to do 2 things. Well, many things, but these are 2 things. They're taught to buy into surges off the 200 and the 20. They're also taught to buy into color changes where green takes away a red bar. Now, look at the color changes here. Take a look. Green takes away this red bar. Green takes away this red bar. And so there are 2 color change plays here. Boom! They buy that green bar as soon as it passes the high of this red bar. There's another one. Boom! They buy that bar as soon as the green bar passes the high of the red bar. I call this the color change play. All right, here's another little one here. Boom! Green eliminates the high of that red bar. Now that you know the two main things, all right, surges and color changes, where does the only lose one bar come into play? Well, it's simple. If my traders are going to buy into this bar as it's surging off of the 200, they cannot lose more than this bar. So if the stock were to drop and break the low of one of the bar, they would immediately exit the trade. They're not allowed to lose more than this one bar. If my traders buy into this green bar as it surpasses the red bar, that's the color change play, right? They can't lose more than that one bar. If the stock were to drop and break the low of the bar that they jumped into, boom, they immediately exit the trade. If my traders buy into this green bar, they cannot lose more than that one bar. If the stock drops below the low of that bar that they jumped into, they must immediately exit the trade. Now, traders, listen to me carefully. This is very important. Very important here. Listen to me. There is nothing more, from a technical perspective, there's nothing more important than this step. Step number 4. If I can get you to only lose one bar on every single losing trade, if I can help you get you to the point where that's just automatic, that you never lose more than one bar, I guarantee you, you're going to be a profitable trader. This is the number one way to almost instant profitability. Step 4, limit your losses to one bar. Now, when you win, you're going to win 8 bars, but every time you lose, you'll lose 1. When you win, you might win 20 bars, but every time you lose, you'll lose 1 bar. You might win 4 bars, you'll lose 1. You might win 6 bars, you'll lose 1. You might win 2 bars, you'll lose 1. You might win 1 bar, you'll lose 1. You might win 50 bars, you'll lose 1. You'll have many different types of wins, but you will never have a different type of loss. Your loss will always be 1 bar. Do this, and I promise you, it's freaking guaranteed that the winners will take care of themselves. You see, this rule makes you into the perfect cutter. I want you cutting the stock when it needs to be cut. I want you chopping the stock's neck off when it needs to be chopped off. And that's limiting your losses to 1 bar. Now, listen to this. The 1 bar loss must be within the maximum loss per trade. Do you follow what I'm saying? If your maximum loss per trade is 50, the 1 bar loss point must be less than 50. Now, what if I buy into this bar? Boom. Okay. This is the low of the bar. But if I buy into the bar and I get out at the low of the bar, and if that getting out at the low of the bar represents a loss of $60, not less than 50. That's not my play. I have to skip that play. I have to adhere to the 1 bar loss rule, but I also at the same time must adhere to step 3, maximum loss per trade. Or step number 2, maximum loss per trade. I have to adhere to all of them at the same time. Maximum loss per day, maximum loss per trade, and 1 bar loss amount. So your 1 bar loss amount must always be within the confines of your maximum loss per trade. And if it's not, because sometimes it won't be, you can't take that trade. Every trade's not yours. Every trade does not have your name written on it. Every trade doesn't come neatly decorated with a bow and a tag with your name on it. Some trades just aren't yours. Your plan won't allow you to take certain trades, and you must do it. Now, there are times when you can't take 200 shares, but you might be able to drop back and take 100 shares. That's fine. But if you can't adhere to the plan with 100 shares, you can't go below 100 shares. So that trade is not yours. Okay, very important point there. Very important point. All right, let's go. So, by keeping your loss limited to 1 bar, look at this. This is your risk. This is your risk. But look at your potential. So this is what you're going to lose, but this is your potential win. Look at that. Here's your loss. Look how small that is. Now, how many of these loss amounts fit inside of the win amount? Wow. That's how you stay in this game forever. You make sure that on average, your losses are much smaller than the potential win in the game. Look at this play. This is your loss amount. This is your risk unit. That's what I teach my traders to call it. This is your risk unit. Always know your risk unit. But this is your potential win in the play. Now, I always say this is the upside down snowman, right? So I'm going to put some Oreo cookies here like I used to do as a kid. All right. Nice little snowman. Let's give him a little hat here. Little hat there. Little carrot for a nose. There's some twigs off of a tree for his hands. And go into the closet and grab some old boots or something like that. I used to do as a kid. I want my traders playing the snowman game. Do you understand? I want the head to be the loss. I want the body to be the gains. In this fashion, you can lose 2-3 times in a row and get one winning trade, and it wipes out all of the 3 losses. This keeps you in the game. This keeps you consistent. Keep your risk unit limited to 1 bar, and you will be in this game forever. All right. Let's take a look at another play. This is Uber. We're looking at Uber here, right? Again, 2-minute chart. Every bar represents 2 minutes of trading. We've got the 20-period moving average, and we have the 200-period moving average. All right. Now, as a general guideline, when our stocks are above the moving averages, we tend to look mostly for moves to the upside. When the stock is under the moving averages, we look for moves to the downside most of the time. Not all the time, but most of the time. All right. So we've got the stock Uber is above the moving averages. All right. So we're going to look for upside movement because we are above the moving averages. Now, let's find the color changes. Do you see them? Do you see the color changes? When does green wipe out a red bar? Right here. Boom! Let's come from way over here. Boom! Right there. Where is your risk unit? 1 bar. 1 bar loss rule. That's my risk unit. This is the potential win. That's the snowman right there. All right. This is, again, I'm not going back and cherry picking things for you. I'm using every example from yesterday. This is just yesterday. All right. Let's take a look at another color change. Look at this one. Green, boom, takes out red. What's your risk unit? The 1 bar risk unit, the 1 bar rule. And even here is your potential. Okay? Boom! Boom! What's your risk unit? Under that bar. That's really small. So do you see this? This one's a little bigger. You have to make sure that because this risk unit is a little bigger, does it adhere to my $50 maximum loss per trade rule? Let's go over it. So I'm entering here, more or less. Let's call that 30, 45, 30. And then low. Let's call that 45. Even. That's 45, 30, 45 even. All right. I will lose $30. All right. If I get stopped out. That's far below my maximum loss of $50. I can play this. Boom. This one I can probably play. This one I can play 100 because 200 I would lose $60. This one I can probably play 200 because it's smaller. And this one I can probably play 300 shares. That's very small. And I love that sound. That's it. Beautiful. I will tell you, if we stop right here and you do these 4 things, oh my God, traders. If I can get you to never lose a specific dollar amount on any given day, let's say that's 200. If I can get you to take that 200 divided by 4, or 2 if you want to give yourself more room, but let's say 4. And I can get you to concentrate in the right price area to trade the Ubers of the world, to trade the, the right stocks in the right price range. And if I can get you to never lose more than 1 bar ever, you will be doing your job. And in the market will do its job. The market's going to go all by itself. The market's going to win all by itself. You can throw darts at a list of stocks and play these 4 things, play utilizing these 4 things. And I promise you, that you, out of every 10 trades, you'll have a few of them you're going to have to cut, and you'll have several of them go. But the ones you cut will be small, and the ones that go will more than wipe out and make up for those losses and throw you into profitable territory. You don't even have to be a good stock selector as long as you limit your loss to 1 bar. You don't even have to choose well. You'll be doing what stands in the way of consistent profitability. Limiting your losses stand in the way of consistent profitability. Now add some skill at selecting the right things, and then that throws you way over the top. All right, traders, very important, basic, but extraordinarily powerful. These are the foundational cornerstones upon which proper trading takes place. Take a look at MU here. MU, again, a 2-minute chart. This is the opening bar of the 14th, Friday. Now, remember I told you that my traders, they look when the stock is above the moving averages. See, above the 20, above the 200. They're looking for upside. Unless the stock opens too far above the moving averages. If the stock opens too far above and gives them a red bar, they bet the opposite way. All right? You can be too far away from your moving averages. Stocks can get far away. They can't stay far away. They can get far away. They can't stay far away. So in this case, MU opens far away and then gives my traders a red bar. Remember, I want them jumping into surge bars. Do you remember that? We do color changes and surge bars. I want them jumping into surge bars. This is a surge bar. I want them jumping into that bar. In this case, they're betting on the way down. They're shorting. If they enter into this surge bar as it's forming, they're going to protect themselves with the 1 bar rule. Now, this 1 bar rule must meet your $50 maximum loss per trade or your $100 maximum loss per trade, whichever one you have. All right. And if we look at this, let's say this is 55, and let's say this is 80. So we're well within. It's about, let's call that 35 cents. So they're going to lose $35 with 100 shares. They're well within their $50 maximum loss per trade. Now look at the risk unit. Always know your risk unit. And here's the potential. And there's your snowman. When we play short, the snowman is on its feet. And when we play long, the snowman is on its head. Boom. There we go. Now, this is a beautiful NFT. Somebody NFT this. Non-fungible token. Do it. Do it. Somebody NFT it for me. Boom. That's professional snowman trading. All right? Beautiful. Remember I told you I like surge bars off the moving averages. Now this play is to the upside. All right? This is not only a color change bar, it's a surge bar off the 200. We're moving. Beautiful. What's your risk? You know the risk. That's your risk unit. Now, I'm trying to grow that snowman. Okay? Beautiful. I love it. I love this game. Facebook. This is Facebook. Again, operating off of Friday. First bar of the day. Boom. I'm okay. That's a powerful green bar, not a red bar. It's a powerful green bar. Remember, surge bars, I'm okay with my traders jumping into that bar, but they've got to be willing to limit their losses to that one bar. That might be a little too sizable in this price range for the traders at the lower levels. All right, 311 and change to 309.50. That's losing too much. All right, unless they are at a different level and have maybe a $300 maximum loss per trade or something like that. But anyway, this would be the proper way to play it. Boom! Risk unit. Now, let's go. All right. And so that's the all-important step 4. Don't lose more than one bar. Take a look at this one. This is Carnival Cruise Line. Boom! Nice, fat, solid surge green bar. I call them elephant bars. This is my risk unit. And as I can see here, we got a nice little tight risk unit. Let's call that 30 cents. We're in. Color change. Boom! Green above red. Look at this risk unit. Beautiful. Here's another one. Boom! Color change. Here's this risk unit. Not allowing yourself to lose more than this one bar. And they're all over the place here. Beautiful. This is the most important of all.